Hello, and how are you? I hope that you are having a fantastic day. Today, we're going to look at cryptocurrency news. We're going to look at the IRS and cryptocurrency donations. We're going to take a look at Ethereum and its decentralized finance projects. And we'll take a quick look at New York City. Are they going to launch their own cryptocurrency? Imagine that, a United States city with its own cryptocurrency. Well, this has been submitted by New York legislatures, so time will tell whether or not they actually get the votes from the legislation to approve creating a New York City cryptocurrency. So let's get into it. I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. And you really are smarter than you realize. Take a look at the articles that you can find and the information that you can find both online and from people you know or experts you know, because doing your own research is always critical when it comes to something like cryptocurrency. I'll tell you what, I've been looking and learning about cryptocurrencies for a year and a half now, and the rabbit hole goes extremely deep. There is a lot you can learn about it. It really just depends on how knowledgeable you want to become. So, IRS adds 2 new QAs on crypto donations. And so the highlights of what the IRS has said about crypto donations is they broke it down kind of into 4 categories. One was below 5,000 and above 5,000. And with donations above 5,000, they say that you need a Form 8283 from the organization that you made the donation to. However, the signed Form 8283 will not be sufficient to substantiate the value of the donation. So it's not a question of did you make the donation, but rather how much was the donation worth. In order to prove the value of the donation, the resulting deduction, taxpayers will still have to get it appraised by a qualified appraiser. Now, the other 2, so we've covered 2 out of the 4. Here's the other 2 out of the 4. There could be 2 scenarios: donating crypto assets which you held for less than a year and donating crypto assets which you held for more than a year. So there will be a difference in the tax liability for both situations. The conclusion paragraph is, it's somewhat interesting to see that the IRS adding these 2 new questions on crypto donations without any public notification. You would have noticed this. You would not have noticed this unless you are constantly looking for new developments in the crypto tax space. Like me, the guy that wrote the article, not me personally. This shows that the IRS is also looking at the donor's side of taxation and substantial requirements. On a side note, this is good news for charities because IRS's acknowledgement of crypto donations can open up a new source of funding for charities. So here's the bottom line. If you're a charity or if you're donating money to a charity using cryptocurrency, if it's an amount that you want to have deducted via your tax forms and through the IRS, you really need to get a tax professional to figure out what your tax obligation or your tax discount will actually be. Because just reading through this little bit of information here made it very clear to me that this is not easy to clarify or understand. And I would definitely think that in order to do this correctly, you'll want to seek the advice and counsel of a tax professional. I'm not a tax professional, and so you'll need to find somebody else other than me. Now, Dutch derivatives exchange Deribit to move to crypto-friendly Panama. So this was announced on Thursday. The Amsterdam-based crypto derivatives exchange will operate out of Panama as DRB Panama Incorporated, a wholly owned subsidiary of the current platform Deribit BV, beginning on February 20th. The company claimed the Netherlands' presumed adoption of very strict anti-money laundering regulations applied to cryptocurrency firms spurred the transatlantic voyage. And so really the key thing to pick up from this is some countries are getting very, very strict about their regulations with cryptocurrencies, and other countries are not as strict. And the countries that are getting stricter are forcing crypto exchanges and crypto related businesses to change countries, to go and set up business in other countries, simply because they either choose not to want to follow those regulations, or they have found it too costly to follow the regulations for their particular business model. So this is one example. There's been many others over the last couple of years. It caught my eye because it is recent news. Now, Ethereum, as Ethereum use in DeFi continues to skyrocket, will the price of Ethereum also skyrocket? Malta-based crypto exchange Binance published its third report on decentralized finance, DeFi, applications yesterday, focusing particularly on developments in the DeFi space relating to Ethereum. The report stated that Ethereum's spectrum of applications is more extensive than other blockchains, and that most of the decentralized finance ecosystem is so far being built on Ethereum. And that's very, very true. A lot of the decentralized finance applications are being built on the Ethereum blockchain using smart contracts. And so decentralized finance is basically a way where people are putting up cryptocurrency to loan to other people, and they receive an interest payment in exchange for offering their cryptocurrency as a form of a loan, as far as creating a loan. And because this is decentralized, it gives people an opportunity to put up collateral and earn interest, or people to get loans all over the world. And so you might be in one country and your cryptocurrency could be loaned to somebody in another country entirely around the world or some other location. And that's really one of the visions of cryptocurrency from the beginning, is that it would allow people to become their own bank. And by becoming your own bank, you're able to lend, and not necessarily be the borrower, or vice versa. You may find that it's easier to borrow via cryptocurrency than it would be if you went to a bank and tried to borrow money. And so this also gives people who are making the loans an opportunity to make better interest rates than people who are depositing money into a bank savings account. And so this could be good for a lot of people all the way around. If you're interested in it, you'll find a link to this article in the comments below. The next one, Bitcoin price to rise above 20,000 in 2020, says Bitpay's Singh. Only days after Nexo co-founder Anthony I'm not going to pronounce that. I know I'll butcher it. I don't know how to pronounce it correctly. But this gentleman made the case for a $50,000 Bitcoin price in 2020. BitPay Chief Commercial Officer Sunny Singh has also shared his belief that the crypto assets will hit new all-time highs this year. Notably, Singh shared what turned out to be a correct prediction that Bitcoin would be close to 15,000 in 2019, with Bloomberg a little more than a year ago. This year, I'm going to make a prediction, Singh told Bloomberg's Taylor Riggs on Wednesday. I think Bitcoin passes the all-time high and goes past $20,000 this year. Now, the article goes into specifics about why he believes that. I'll leave that for you if you decide you want to dig into it deeper, and I'll provide the link down below. So, total number of failed cryptocurrency project falls by 20% in 2019. There were more than 500 failed cryptocurrency projects in 2019, the majority of which were scams. So, fewer failed cryptocurrency projects in 2019. It's not surprising that most cryptocurrency project failures happen when the market is bleeding. The largest number of cryptocurrency projects appeared during the early months of 2019, when the bear market was at its most savage. So how did these cryptocurrency projects die? Dead coins, and Dead Coins is a website I've done a video on several months ago. But Dead Coin divides them into 4 categories: deceased, hacked, scam, or a parody. Most of the dead projects have been categorized as scams, and they do provide a link so you can go look that up. In both 2018 and 2019, 55% and 58% of the projects respectively entered the category of scam. The rest failed due to hacks or impersonator projects. So quite interesting. One of the things to keep in mind when you're looking at different cryptocurrency projects is you want to make sure that you're investing in a cryptocurrency project that is likely to succeed. And so do a little bit of your own due diligence, do a little bit of your own research before you invest your money in any cryptocurrency project, because you don't want to have invested in something that just completely dies or disappears. So, South Korea's should let banks launch cryptocurrency FinTech. So in other words, what's happening here is in South Korea, the Fourth Industrial Revolution Commission under the presidential office says the likes of Bitcoin derivatives should be instrumental as part of a medium and long-term strategy to integrate cryptocurrencies into the economy. The commission also proposed allowing financial institutions to handle crypto assets and support the development of custody technology. Participants in the traditional capital markets, such as securities firms and banks, should develop and introduce domestic custody solutions to handle cryptocurrency assets so that the Korean cryptocurrency asset custody market will not depend on foreign countries. So here's kind of the key thing here. South Korea is noticing that America, New York, the Bakkt exchange, and Binance, and other entities all over the world. I mean, Binance is out of Malta, New York is, of course, out of the United States, et cetera, et cetera. All these other countries are getting involved with cryptocurrency either as exchanges or place to custody those assets. And this commission under the presidential office of South Korea is recommending that South Korea also get into the game in terms of institutional level investing in cryptocurrency by offering institutional custody services and making their legal framework friendlier for cryptocurrency exchanges. And so all of this is actually good news for cryptocurrency overall. Now here's the one that I thought was quite interesting. New York lawmakers propose a statewide cryptocurrency. Lawmakers in New York have proposed a statewide cryptocurrency and blockchain-based banking platform to encourage the recirculation of money in low-income communities. The project, pitched as public Venmo, was proposed by New York State Assembly member Ron Kim, Senator Julia Salazar, and Cornell law professor Robert Hockett. Should the proposal be accepted, it would mark the USA's first publicly owned electronic banking platform alongside a digital currency that could be exchanged for various goods and services in the state. The project aims to compensate residents for work that is either unpaid or underpaid. This could encompass babysitting children or caring for senior citizens. Sounds like a very interesting project, especially with the way that they're thinking about using cryptocurrency in order to compensate or increase the income of people that are doing health care, child care or senior citizen care, but they're caring for other people in order for those people to make a better income. Because a lot of times people that are providing child care or caring for senior citizens, a lot of those folks really don't make a very large income. And so this could be, has good potential and obviously has a good side to why they're proposing it. So, and then the last piece of information, last article we're going to cover today is Bakkt launches its institutional custody service for Bitcoin. Now, institutional clients, it's often inconvenient to buy Bitcoin and store it themselves. Instead, they will favor using a third-party service provider. In fact, with some institutional clients, such as if you were a police officer or some other, pension funds. Pension funds are not able to self-custody assets. So if a pension fund decides to invest in real estate property, that property has to be owned by a third party. Otherwise, the pension fund cannot make that investment. And so there's some institutional clients that by law are unable to custody and store an asset such as Bitcoin themselves. They need a third party in order to do that. And so Bakkt, the B-A-K-K-T, the Bakkt exchange, which was a joint venture between the company that owns the New York Stock Exchange, Starbucks, and Microsoft, they are stepping in and providing an institutional grade custody service. Bakkt now wants to be the provider by launching its institutional custody solution. Following approval by the New York Department of Financial Services, the company can offer Bitcoin custody to all institutions. Some companies are already signed up for the new service. The list includes Pantera Capital, Galaxy Digital, and Tagami. So the list onboarding additional companies will be an ongoing process. To securely store the assets, Bakkt will use biometrically controlled bank-grade vaults and enterprise-grade hardware security modules. There are also primary and secondary facilities distributed around the world. Transactions will need to be signed by multiple entities across different geographical locations for depositing and withdrawing of cryptocurrency assets. And so, while the Bakkt launch back in September 24th was not as big of a showstopper that most people in the Bitcoin or cryptocurrency industry expected, it looks like Bakkt is going to continue to grow its offerings, launching additional services, and eventually will become a major player in the cryptocurrency industry. So, in conclusion, how can I be of service to you? Please leave comments below. If you want to keep your comments private, I have created a Google form so that you can communicate directly with us. In the meantime, I hope that you'll like, subscribe, and hodl. And I hope that you have a fantastic day.